Welcome to Trading Lounge in the S&P 500 for the 3rd of October, and we're looking at this pattern here. There is support at the 2900 here, even though that the market has moved through that 2900 area here. It's still likely to cling to that a little bit in a series of thirds and fourth waves in there. We'll have a bit of a look at that, but in a nutshell here, we're looking down at wave 1 for this point here. So wave 1 here, wave 2 back here. We're looking for wave 3 that should come a little bit lower, wave 4 that will come back and test that 2900 roughly, and then down for wave 5 to coming down into this area here. Looking at this as an A wave, a B wave, and a C wave here. We will have a look at the bigger picture for a bigger bearish picture as well, but let's just go in and have a little look at this little area here, because in the bigger picture, if we do see the market move down even further from here, well, then we'll be able to catch that, because we need to get wave 1, 2, 3, 4, and 5, and after that point there, after that low here, after we've got those 5 points, if there's a breach of that, then we know that we're obviously going lower from that point. So we'll move with the evidence and act on the evidence, and that is the evidence there. So in the meantime, we are currently in this third wave here. So we'll also be looking for 5 waves in this third wave here. So let's start to go in and have a little look at that. So in a nutshell, this is what we're looking for here. So we've got 5 waves down to here and ABC back here. We're looking for the third wave, a fourth wave here, and a fifth wave here in the sort of bigger picture of things. And on the 1 hour chart,
report unless it's done. Really? Just holding up some flags.
It's a bit complicated here, but from wave 2 here to wave 3 here, we're looking at wave 1, 2, 3, 4, and 5 here. If you're trading at the moment and you're in the market and you want to hold for lower ground, let's just look at where we can put for stops here, because this is the 38.2% retracement level here at 29, just above 2900 area here. So you'd want to certainly keep it above that there, wouldn't you? So keeping it above perhaps this little level here, 20, well, just keep it above 29.10. Don't put stops on whole numbers. So, and then in here we've got group 1, which is 1, 2, and 3. So you don't want to put stops there. So 29.14 or 29.17 would be the answer if you wanted to hold through these particular corrections that are going to occur at this level here. So we're still looking, this wave 4 may get a bit more complicated, I'm not quite sure, but taking it from that point there, that will come back up and test the previous wave 4. And then because the extension's in wave 3 here, that means that this level here from, it's not that much really, is it, from here to here, will be the, just copy that, will be the length of this area here. So it's going to get us close to the 2800 here, which obviously is the previous lows over here as well. On the tick chart here, let's just have a look at that. So nothing's sort of really changed. I have changed this here as wave 1 here, because I did start the top from this area through here, and so I've just changed that in terms of 1 and 2 and 3 and 4 and 5 here for wave 1 and 2 here, then 1 and 2 here, and then down like this here. So still leaves me with wave 3 here, and as I mentioned, from the top of wave 2 here down to this wave 3 here, the 38.2% retracement level is 29, just above the 2900 area here. So 29.14 and 17 would be when I'm trading short. I like to keep my last as stops. I like to keep the last number's got to be 4 or 7. I won't go into that at the moment. So, so yeah, and remember that the 2900 is the 61.8% mark. So the market will want to try to sort of gravitate towards that at some point, and use that as a balance point here. We've got two wave fours to get through. I've got this as an A and a B and a C, and that counts correctly, quite close to the 38.2% retracement level, and does appear that we've got five waves down here. So perhaps in this instance here, we'll just simply pull up to this area here and then head down again from there. I mean, if we had three waves down, well, then that would be different. Then we'd still be in that corrective position there. But either way, whatever happens, you need to keep away from that point there. Otherwise, we can look at this. In fact, I should just use the other ones here. So and so on to the downside here to make that wave 5 here, if that's the case. But it may get a bit more complicated. I'll need to really pull that apart and have a look at that. And also too, I'll just check the cash market just to see. Yeah, it's created a wave 4. Is it enough? I don't know. So anyway, we're at the bottom of the trend. So that either means you need to lock in some profits or you need to keep the stop well out of the way. Or I want to have a look at the bigger picture as well. So you have to excuse my voice. I think I picked up the flu last night. So we've been looking at it like this here. Okay, so, but if I go to the weekly chart here, so from the GFC down here at, oh, yeah, that long ago, was it? Crikey. So from this large wave 4 here, we're looking at 1 and 2 here, and then all the way up for the third here. This is where the tricky bit starts here, but I think it's just good to shoot the breeze on it. So wave 5 of 3 here. So we know that the move down here is in 3 waves, and we've also made a top here. So it's possible to have that as wave 4 here and have this as wave 5 right here, and then we have this down here as wave 1 here and wave 2 here with a top in play here, and that would be the top for, if I got that there, no, I haven't got it there, but anyway, the top there, and we come much further down from that point. Okay, so that's one possibility at that point. You know, it may not be correct, but it fits, so it's okay, you know, to look at it like that. The other way to look at this too is that that the move up here, if I can remove that, put that up there, is just wave 1 here, and we're coming back for wave 2. So instead of coming down down in 5 waves to this point here, we could actually come down a little bit further into the 61.50, 60% area and then move up from there. But I normally find too, if this was going to be an A wave and a B wave and a C wave here for wave 2 here, then because the wave B came up really high here, then the C wave will just come down here as a bit of a flat correction at this point. If this had only pulled up to the 61.8%, then we would have gone deeper at that point. But because it's gone higher here, it tends to just come back to where it is. So the 2800s there. So it's possible to have that as 1 and 2 and move up higher from that point. It's also possible to have this up here as wave B here. So all of this down here is wave A here, wave B up here, and then a deeper wave C down at this point here as well for the wave 4 to be over here at that point. So there's a few variations here that would need to play out through here. But like I just mentioned, our first job is really just to count the 5 waves down to roughly the 2800 area here, and after the 5 waves, if there's a new low to come in here, then we need to look at some other patterns from that point. So but yeah, all of these all of these are valid here as such, so we'll just leave them there for the time being. There's no point in marrying something if there's no evidence to it, you know, so we just need to gather that. Alrighty, thanks for tuning in. Cheers.